A $45,000 kitchen renovation, finished a few weeks ago. The client paid on time. The punch list is done. On paper, it looked like the kind of job you build a business on. Then the books closed and the net profit was just $1,200. The contractor didn't know anything was wrong until the month was over. Most contractors don't. They find out if a job made money after it's over when there's nothing left to fix. I spent years running a 150-person retail operation across 7 states with $24 million a year in revenue. And the lesson I took from that is that if your numbers can't tell you what's happening in real time, you're making every decision a month late. Now that's true in retail, but it's far worse for contractors. In a few minutes, I'll show you where the money disappears on a job like that kitchen and how to see it when you can still do something about it. All right, here's the job. $45,000 in revenue, about $22,000 in material. That's your cabinets, your countertops, tile, flooring, 3 crews on site for 2 weeks, plus an electrician and a plumber for subs. The estimate showed a net of $9,000. But here's what actually happened. 3 Home Depot receipts that never made it into the job file. They went into the glove compartment and stayed there. That's $1,400 in materials the crew paid for, but it was never tied to this kitchen. The labor had got logged under a general bucket instead of this job, so nobody noticed when the crew spent 3 extra days on it. And the electrician's invoice came in $800 over the estimate. They got paid, it got filed away, and it never landed against the kitchen. Now, none of these was done maliciously, and every one of these moves makes sense in the moment. But when the books closed, the kitchen had quietly eaten about $7,800 in costs that were never tracked to it. The company P&L still looked fine. The job was quietly losing money though. Now, if you want to run your own numbers on a job like this, I built a free job cost calculator. You plug in the revenue, the materials, labor, subs, and overhead, and it shows you what the margin actually is and what happens when one receipt goes missing. The link is in the description. Here's the underlying concept. It's called job costing, and it's the single biggest difference between a contractor who runs a business and a contractor who runs a job. Job costing means every dollar that goes out, every receipt, every hour of labor, every sub invoice, and a slice of your overhead gets tied to a specific job. Not a general category, not the month, the actual kitchen, the actual bathroom, or the actual roof. Here's the simplest way to picture it. Each job has its own bucket. Money in from the customer goes in the bucket. Every cost the job causes, material, labor, subs, and a piece of your shop rent and your truck insurance, that comes out of that same bucket. When the job's done, whatever's left in the bucket is the profit on that job. If things go sideways, whatever's missing from that bucket tells you where, well, you still can do something about it. The part most contractors skip is the slice of the overhead. That's the fixed cost of being in business. Your shop rent, truck, insurance, your phone, your office. If your overhead is $3,000 a month and you run 6 jobs, each of those jobs has to carry about $500 of overhead. If you don't load that in, every job looks about $500 more profitable than it really is. When you job cost in real time, meaning you see the numbers the same week the job is running, you'll catch problems on day 4 instead of on day 30. That's the point. Real-time visibility means you can fix it. After the month closes, all you can do is file it away. Now let me show you what this looks like when the system is set up to catch it in real time. This is the CFO Dashboard inside Best Decision Project Tools. 3 inputs at the top, the income target percentage, that's the margin you're trying to hit on your work, the monthly overhead in dollars, your shop rent, insurance, office cost, and then your cash on hand. That number, if you're connected to your Quickbooks account, will actually pull from your bank accounts in real time. That's it. Those 3 numbers, plus the job data flowing in from the field, give you the whole picture. The gauges are where you read the big signals, your overall margin, your WIP income versus progress, that's work in progress money you've earned but you haven't billed out yet, the work in progress costs versus the progress of the job, your budget consumption, your collection rate, and your backlog months. Each one is color-coded green, yellow, and red so that you can read the state of the business in about 6 seconds. Below the gauges are your KPI cards, your days cash on hand, your net income, things like that. The actual numbers behind what the gauges are telling you. One of the most important numbers is your unearned liability. This is the amount of money that you've taken from customers, but you haven't began using it for the work. Think of a home and garden show where you take about 3 or 4 deposits from jobs. That money has all been received, but no work has been done, so it is unearned. That money is to be set aside and not used for operating expenses. It needs to be there when it's time to start the job. Now let's drill into a job. Here's our sample kitchen. Same shape as the $45,000 one we were just talking about. Look at the profit variance. About $6,000 below where the estimate said the job should land. The job is still making money, just $6,000 less than what we had planned. And the system is telling me that today. Not at the end of the month, today. Now, when I click into the actuals per job breakdown, it shows me where my materials came in over budget and labor came in over budget. I don't have to go hunting. The numbers point at the leak. Now, how does this stay current? That's where the receipt capture comes in. This is the employee version of Project Tools. The crew member finishes their order at the supply house. They pull up receipt capture. They open their camera, they capture the receipt, they select the job it goes to. Categories are optional. We're gonna hit materials here. And then they can record a brief voice memo that will be transcribed for the bookkeeper. What separates Project Tools receipt capture from everyone else is the ability to fine tune where the expense goes. For instance, this was for the Harrington kitchen remodel job. We purchased the faucet and the drain components, and there's a $100 plumbing wrench on here that should go into small tools. So now we're gonna go ahead and submit that receipt. The AI will transcribe it. It will extract the information and make it easy for our bookkeeper to accept it and push it over to QuickBooks Online if you have that connected. That's about 10 seconds start to finish. Now on the admin side, that receipt lands in the receipt dashboard. The AI will pull out the vendor, the date, and the total. And if you have QuickBooks connected, the admin can push the expense over as a purchase against the job, automatically categorized. The cost rolls into the project expenses and the kitchen and the CFO dashboard update. That's the difference. The receipt never sits in a glove compartment. The labor never gets logged under a general bucket. The job either makes money or it doesn't, and you find out on day 4. If you're not using our tools, here's the shape of it in plain QuickBooks. Set up each job as a project in QuickBooks Online Projects. On every bill you enter and every receipt you record, assign it to the right project before you save. Same with labor. Run payroll through QuickBooks and tag employee hours to the project. The project tabs will give you a running income and cost view per job. It works. It takes more discipline because nothing assigns itself. You have to remember to tag every entry, but the shape of the data is the same. Revenue in, cost out per job with a slice of overhead loaded in. Now here's 3 things you can do today without buying anything. Number 1, start assigning receipts to jobs as they happen. Even if the system is a manila envelope in the glove box with the job name written on it, or a text thread per job where the group sends receipt photos. The point is that the receipt lands against a specific kitchen, a specific roof, or a specific bathroom, not a general pile. Number 2, pull your last completed job and actually cost it. Revenue in, the customer's check, and then every material receipt tied to it. Every hour your crew spent, every sub invoice, plus a slice of your monthly overhead. Compare that net to what your estimate said. Whatever the gap is, that's the number that's been invisible. And 3, if you want to run your own numbers on this, grab the job cost calculator from the description. It takes about 2 minutes, plug in one job you just finished. You'll either confirm you made what you thought, or you'll find out you didn't. Everything I just showed you, the CFO dashboard, the gauges, the per job drill down, the receipt capture flow from the phone to the push through QuickBooks lives inside one tool. It's called Best Decision Project Tools, and it's built for contractors and trades who want to see job profitability while they could still do something about it. Don't forget the job cost calculator. That link's in the description below. Plug in a job you just finished, run the what if one receipt disappears scenario, and see what that missed receipt would have cost you. If you want to see the full system running on your own jobs, Best Decision Project Tools is designed for you. It's just $69 a month right now on Founders pricing with up to 20 users included. Receipt capture, CFO Dashboard, Quickbooks Sync, and so much more. Details are in the description too. If this episode helped, subscribe. Next week, I'll tell you how to find out if your bookkeeper actually understands construction, because once you can see your job costs, the next question is whether the person reading them knows what to do with them.